Like, why
Feels
is
good.
all of your Bitcoin not on your ledger? I would have
Because it
assumed
takes
that.
time when you buy with Swan.
What time does it take? Are they just making interest on a delay of the transaction?
I don't know, but it takes a long time to get it before you can move it off.
Really? Huh.
See, that
When you
sounds like a
buy,
negative.
I mean, it's still, I still got that Bitcoin at that price. I just don't have
Yeah.
it under my control.
What's your thought on this? I've had this question for a long. Oh, sorry, hold on. I've had this question for a long time. If you buy Bitcoin at a preferred price or any crypto, buy it at a
Sure.
preferred price, but then you move it wallet to wallet.
Okay.
Let's just do round numbers. You buy Bitcoin at 20,000 and you've got, let's just call it a whole coin. And hold on, sorry. My Google's talking to me. So you buy it and then you transfer it to your ledger. But by then, Bitcoin has actually gone up in price
Okay.
or down in price. It doesn't even matter. Technically, it's not a transfer. Technically, it's a sell and a buy. Does it affect your dollar cost average at all? It shouldn't, but
Wait, what?
What? No, it's not a buy and a sell. What?
How is it a buy?
What?
First of all, I didn't even realize we were live, and I was just talking out of my A double squiggly. But
double
what?
squiggly.
Can you give us? Okay, so you're saying you buy Bitcoin at 20,000,
Yep.
and then you move it to your cold storage,
Ledger,
which
your
is
cold storage or your ledger.
yeah, whatever your storage, hot, cold.
Yeah,
And at that point, Bitcoin is 15 or 25,000.
sure.
What is your point? I'm not sure I'm getting it.
My question, it's not a point, it's a question because my ADD brain don't do numbers well. Like I do street math well, but like when I try to figure out like, wait, my brain always loses its thread. So if I buy Bitcoin at 20 and I need to move it to another wallet, from a tax perspective and the tax implication, that's a transaction because it is even though it's being transferred, it is treated as a buy and a sell in the crypto sphere, specifically around taxes. And so that got me thinking like, wait, does this mess up my dollar cost average?
So it's not because it's your wallets.
Yeah, that's literally just moving. Like, I think for tax purposes, that's a lot more complicated. So
Yeah, for tax purposes, it has to go when you go coin to coin. If you're going from Pepe to ETH, for example, and you go from any coin into USD, and at that point you will have a realized gain or realized loss, or you could have the third option or realize nothing because you've been at the exact same price. Maybe it's just USDC.
Probably realize nothing. Yeah.
Yeah, but because you own both wallets and there's not actually a gain being made, there's no arbitrage of value being made, there's no tax implication there.
Well, no, there is a tax implication. I guarantee that. It might be a net zero, but I have to claim that transaction. Like I have to list it.
that is ridiculous.
I've never listed that on my taxes, so hopefully the IRS comes for me.
Well, we're
'Cause
small fries.
they're my wallets. If I take $1 out of one wallet and put it in another wallet, do I have to tell the IRS?
Yes. So technically, but because it's USD to USD, literally USD is almost what I'm learning in this whole thing about money is when you're the reserve currency, like our conversation we were having about thinking in dollars, that actually makes it, I believe, a separate asset class. His cat probably attacked his computer. So yeah, Aussie had to bail. But when you think when the reserve currency is the way it is, it's actually treated, I believe, as another asset class. They're trying to make sure that I'm treating, and maybe Bitcoin is different than like altcoins. And as we're discovering from a lot of the case laws out here now, Bitcoin is starting to be treated differently. And like it's radically obvious that Bitcoin is not being named in any of these lawsuits, but Ethereum and all this other stuff is. So like that can't help but be noticed. But this
So-
idea, go ahead.
Yeah. So, but this idea of moving, I'm going to ask Micah Frame, who's come on More Than Blockchain. He's a
Sure.
crypto CPA. I'm going to ask him. I don't think you have to list that. That's not the way I've understood it. Only in the event, from everything I've read, if there's any price arbitrage, and just by moving something, it doesn't matter. And the example I gave you was just a US dollar, a physical US dollar. If I move that from my wallet into my pocket, I'm not going to tell the IRS about it. Similarly, like, you should be able to move Bitcoin around however you want, as long as you're not, you know, as long as you're
Arbitrage
not
in
getting
dollars.
paid for it.
Well,
Yeah.
and I agree with you. And maybe my particular CPA is just trying to CYA right now, in terms of like the case law on this and the IRS penalties on this is so goofy. Let's just be extra careful. So I admit that my CPA might be telling me, but so far the message I'm getting back is let's just be careful. Let's list any transfers, any migrations, because because let's call Bitcoin not US dollars. Let's call Bitcoin gold. And if I bought
Okay.
gold here, to move it there, I have to sell it, like, or sell my owner share of it. And so I have to, like, I've sold it at a certain spot. And so now I have to, then I buy in, and there's arbitrage whether you like it or not, because you've let go of that thing for a moment. And in the crypto space, is that what's happening? Like, if I'm on a pseudo wallet, like on Coinbase, is it technically being sold for UST and then it's being sold over here or added over here? I don't know what the actual mechanism and what even matters. But to your guys, your guests' point, listen, it's negligible to the nth of a penny. Don't worry about it. They're not going to come after you on tax penalties on that small of a deal. You know?
Yeah, because I don't know. I mean, and I'll ask Micah and have it for Tuesday. But like, if you take Bitcoin and you move it 100 times,
Yeah.
who cares what the price is? One Bitcoin's still one Bitcoin, right? But what's going to happen is you're going to pay 100 transaction fees.
Yeah.
So as you move it, you're actually losing value. You're actually losing Bitcoin. Who cares what it is to the US dollar, the euro, the peso, the yen, the won?
Yeah. Yeah.
So you don't really want to move it around a lot. And I think, to your gold example, if you own $2 million of gold,
Yeah.
you don't probably have it physically. So then you do, like, it's a different thing. Like
Yeah.
this has to do with like ownership, like how we own things, you know?
Yeah, and you're right about so the transaction fees also can't be ignored, because if I claim any transaction fees, I also have to claim the transaction that incurred that fee. So the trick is like, if you move your Bitcoin from Swan to Coinbase to KuCoin back to your ledger for reasons,
Sure.
like, and you're like, well, shit, I ended up paying like $40 in transaction fees in total, and I want to write that off. Well, you're going to have to tell why you get to write this off. And you're right. And then the value did decrease. So in that case, there are tax implications. But if you're not going to write off the transaction fees and you're just going to roll with it, you're probably right. You probably don't have to claim anything for now. And again, maybe that's also because we're just small fries. With the BlackRock ETF trust, they're going to have to write off. They're going to have to claim all their shit.
Well, and let's go right into that. This gets into ownership.
Yeah.
Right.
I want
If
to
it's a
talk about the
trust-
ownership aspect of this.
Yeah, because if it's a trust, it could be a trust of apples. Here's my apples. I don't actually own the apples. I own the paper to the apples.
The
Bitcoin is
fractionalized apple.
Yeah, but Bitcoin is completely different when you actually physically have Bitcoin in your cold storage wallet. And I think that's where, this conversation we're about to have with normies and non-normies and all this stuff really comes down to how much individual responsibility do people want when it comes to holding a lot of value. And we've talked about this before on the show. I still believe it's very little, and I get that. Because we're growing up in a world with banks, right? Where we put all of our
What is
stuff
very
in
little?
banks.
Like, lay that out clearly. What is
Like
very
less
little?
than 1%. We don't want any responsibility for any of the value we have.
Totally.
A
Totally.
lot of people, and Grant, you'll be the first one to know this. A lot of people in real estate, they don't. What is it? You don't want to own it. You don't want to own anything, but you want to control everything. And that's the world that we've kind of live in Web 2. You don't want to own anything, but you want to kind of control everything. You know? Whereas in crypto, it's like F control. You just want to own everything, because ownership on some level does imply control, but it for me, it implies more responsibility and more accountability about these things. So.
I mean, ownership and control is like everything. I mean, I'm just going to drop this Celsius bomb right here. If you got any funds on Celsius, on July 1st, all your altcoins will be converted to Bitcoin and ETH. So, you don't own your coins there, so you don't control what happens to them.
Well, and this is very so. You're right, and I want to make sure we capture what Jared is saying, because the reason I love business and money. I just saw a great post by Alex Hormozy. It's true entrepreneurs don't do business to get money. They need money to do business. They're in it for something else.
Yep.
And whether it's the game, whether it's the challenge, whether it's the sense of control, this is why the mega wealthy, the lizard people, right? The 1% that rule the world, or whatever your conspiracy
The
belief.
Illuminati?
The Illuminati. I said it out loud. You said it out loud first. These people are not in a money game. They're in a control game.
Yeah.
And we call it power. They don't actually necessarily even care about control over others. They will execute control over others to control their own reality, right? That's what they're trying to do. But that's like the fancy, hyper goofy lingo to talk about why crypto persists, because control is ownership in a maxi's mind. Meaning, if I don't control it, I don't own it. But this validates, and I completely validate what you're saying here, Jarrett, because when we talk about an ETF, and what's worse, it's not even a direct ETF yet. It's just a trust. So you're owning the paper of the trust of the ETF. You don't, like, it's another level of extrapolation where you're not responsible for it. And so there's this thing that we call the responsibility reward matrix, meaning if I want X amount of reward, I need to assume I'm taking on an exact equal amount of responsibility. But that's not what normies do. What you're talking about is normies are fine holding paper on an entity called this BlackRock ETF, which is all of TradFi. You don't actually own anything that the underlying company owns. You own the paper to the thing that says it owns something. So do you actually even own it? Well, the answer is no, because I don't control it technically. And so I think this is why crypto persists, and this is why maxis do have a very strong point, is control is ownership. And if I do not control it, I don't own it. So let's quit fooling ourselves that I don't control or own this thing. This is why real estate is interesting, because I control the paper, I own it. But we use a phrase, don't own it, because that's legal risk. So I'm now like safe legally, but I do control it, so I really do own it. If that makes sense.
Exactly. And for me, that makes sense. And I think Aussie picks up on that too, as he's been in and around real estate more regularly. But like, you'll hear Grant Cardone, he always talks about, he's like, you don't want to own anything. You want to control everything, no?
Yeah.
And then he'll break that down. And, there's legalese, and there's literally using paper to remove thyself from legal issues in the event of. And for me, this Bitcoin BlackRock thing is really cool, because I do think it's going to onboard a bunch of people. But if you're waiting on the fence right now, whether you're a financial institution or you're an individual, for this to go through, for you to then put your money into it, it just doesn't make any sense to me. It's like, why not just buy Bitcoin today? Why not just go through Coinbase's institutional grade level where you can put in millions and millions of dollars? That's what Saylor did to get all his money. Like, there are ways now to get Bitcoin if you're an individual or you're an institution at a very, right now. So like, waiting for this thing to come out, it just seems like you're waiting for a cosign. And this is almost like when people will wait for the rest of society to say that's cool before they'll like wear those shoes or whatever. If you already think it's cool, go out and do this thing. If you already want to invest, you can do it. That's my like whole take on this.
Okay, so I'm going to disagree on one level, and there's a reason why I think certain institutions aren't going to go into it without that cosign. Or it's not even a cosign. It's a saying, hey, we're okay with how this operates. This is an okay asset, because they don't want to get themselves entangled in a whole bunch of trouble, and they've got a fiduciary responsibility to their shareholders. And so with the regulatory risks of, just buying Bitcoin through Coinbase, where Coinbase might not even be a legal platform in the US, you're better off, hey, wait for BlackRock, who we know is a respected institution, and has a long track record to be given an okay for to offer this asset to us, then we can safely justify that to our shareholders. We can safely justify that we're protecting their fiduciary interest as much as we can.
Do you think normies think that consciously?
I think institutions think that. I don't think that's a thought process for institutions. For normies, it's, well, they
It's
don't.
finally safe.
It's finally safe. It's safe. I can access it easily. I mean, it's exchanges are still hard to use for like it's someone who's not used to using an exchange, and normally that's
Crypto
yeah,
exchanges?
crypto exchanges. That's
Oh, got it. Well,
a
yeah.
challenge. And then to add offboarding onto it, so setting up their own Bitcoin wallet, all of that, that's at like a next level.
Yeah, but like an
even
institution
further.
can figure that out. An institution, BlackRock can hire me to do that. You know what I mean?
Yes,
Like that's not
BlackRock
crazy
can.
to get over. And so I guess I disagree with you because I think that it's just BlackRock not wanting to take on the responsibility, which is what you're saying. They don't want to be in trouble fiduciarily. We'll use that word fiduciary because I think it's a good word to use here. But I just don't think that they want to take on the responsibility because I do think actually Coinbase is a fairly well respected institution. They're trying to play by the rules. Coinbase has been around almost a decade. They were the first crypto exchange to be able to actually have an IPO in America. And they've been playing the rules. So I actually don't think it has anything to do with that. And the fact that Coinbase is like, whether Coinbase is a platform or not in 90 days in the US is superfluous because you could get your Bitcoin, get it off the exchange and put it into cold storage in a couple of weeks. And then you don't care. You know, I mean, I guess
I agree with your point, but I don't know what you're countering.
I'm countering
Like,
Aussie saying that it's not a respected institution or on the level of BlackRock. Clearly, it's not. BlackRock has $8 to $10 trillion assets under management. Other than sovereign wealth funds, it basically runs the world. If aliens came down and they said, "Who's the richest people here?" It would be BlackRock, the Saudi group, and like a handful of others.
Yeah.
But I guess I'm pushing back on the, like, you have to wait, like, because I agree. I agree with Grant. I don't think normies, I don't think investors are thinking that way.
Oh, I thought that's what Aussie was getting at. I thought he was getting at that the retail investors they don't like a lot of risk. I think unconsciously, they're like, well, if something goes wrong, I could sue those guys, and they're a behemoth, so I'm kind of safe in their shadow. And I think Aussie was saying, crypto exchanges are unwieldy. And so retail, what we're pointing at is it's so easy to onboard. And here's another level. A lot of people will use retirement funds that already exist to buy an ETF trust piece of paper, and they don't have to develop a wallet. So I think that's what Aussie was saying.
That's what I'm saying for retail. And the comments that I was talking about not being a respected institution, I was talking for that at an institutional level, as a business who wants to invest in crypto, or like who wants to add some crypto exposure to their wallet or to their holdings. Like, a bank is not going to go through Coinbase. Banks have gotten in trouble for interacting with Coinbase. They're not.
Oh, you were saying Coinbase wasn't a respected institution.
I'm not saying. I'm saying that it's not at the level of BlackRock.
He said, yeah, compared to BlackRock, which no one's going to ever argue.
No.
I guess my thing is, it's just like, you can already put Bitcoin in your 401k and your IRA at Fidelity, right? There are other things you can already do this with. There's iTrust Capital, where you can already have a 401k and an IRA all set up with ethereum, Bitcoin, kind of a gamut, whatever you want. So there are already products that already exist for all these people. And I guess I just go back to, if you're a retail or an institutional investor and you want to get into Bitcoin, you can just do it today. You don't have to buy a synthetic paper version of it. And I guess that's where I get kind of lost in this conversation.
Well, I think that it points to an unconscious problem in people. I think, because this is why I asked the question, do you think the normie retail investors or traders even are aware of the risk responsibility matrix? And it's like, no, but everyone's lost money over here. We hear from the headlines, and not as many people has lost money over here from the headlines. And now it's over here. I don't think the average retail person who's wanting to get exposure to Bitcoin, I don't think they know about the things you listed. I didn't know, and I'm in it. I did not know Fidelity. I didn't know ITF. I knew I could buy MicroStrategies, but they're expensive per unit right now. And so, but your point is well made. Like, yes, they could just go buy Bitcoin, and they go, oh, you mean download a Chrome web browser, verify my ID, save a 12-word seed password. What? And like, and did the money clear? Like, do you guys remember the anxiety of like, did my money move? I like, where do I go to that? We know about Bitcoin blockchain scanner. We know about the Ethereum Etherscan. Like, what are we talking about here? But then I go, oh, by the way, you could go log into Fidelity and click purchase, and it's done.
And
You go ahead.
And I think and the argument you say between BlackRock and Fidelity is totally fair. Fidelity is allowing you to buy it straight with Fidelity Crypto. Absolutely.
Yeah, I didn't know that. Yeah.
It's locked on Fidelity Crypto. You can't move it. It's not a withdrawable platform, but it also talks to brand loyalty. Like, if you're doing $5 billion of business plus a business with BlackRock, you're not just going to go figure out how to move that $5 billion and move it to Fidelity. Like, it's a pain in the butt. There's a certain level of brand loyalty and just a barrier of, hey, having to change this is a pain in the butt that they're not going to do it.
So it comes back to responsibility.
That's literally what I was just thinking. Yeah, yeah.
The whole thing comes back to responsibility, both on an institutional level and a retail level. And for that, just keep buying Bitcoin now if you're listening to this.
Yeah.
Because you're way ahead of 99.9,000% of people, because they don't want to take any responsibility.
You know what you're getting at? This is an interesting dynamic of predicting the future. Let's predict the future right now.
Ooh.
So the heliosphere. No. The Oort cloud is this crazy threshold in space that I got a picture of for this, but it doesn't matter. When BlackRock comes online, we're not talking about innovation. We're talking about brand identification. Retail traders, if we've seen wave after wave of retail liquidity enter the market and we go, the onboarding is happening, we have not scratched the surface of the amount of people who have been wanting to get crypto exposure but have been, whether through UX, UI problems, these wallets are very difficult, or whether distrust because of a brand issue within the crypto space. Either one, they're waiting for the BlackRock brand level, the BlackRock level of brand to show up and go, here I am. You're right about Fidelity. I just looked that up. You're absolutely right. They've got a whole account. You could have been doing this the whole time. Swan itself is pretty reliable, but even that's a little sketch. Are they listed security? Are they bonded and insured? Do they file their 990s?
And let's be clear. Fidelity's only been around for less than 3 months. Fidelity has not actually been around for that long.
Okay.
So it's not even.
But it's there.
You mean Fidelity Crypto?
Yeah, Fidelity Crypto.
Fidelity
Crypto has not been around for that long. They've been talking about
my
it for
point
like
is
9 months, but it only really rolled out 3 months ago.
So my whole point, though, is I think this is the wave of onboarding we've been waiting for, and here's my prediction of the future. What we know as Web3 engagement through sexes and dexes will become a dinosaur. By that, I mean there's the opportunity. This is the advantage of having been early, and if you're watching now, you got to hear me on this. There's still a window where you can go familiarize with on-ramps, Uniswap, Coinbase, Gate.io, using VPNs. Grant, there's so much to learn. Yes, but here's why. BlackRock and I will be able to generally get it at the same price. Whereas if you're buying a synthetic piece of paper, how many middlemen have been inserted between you and the BlackRock ETF trust stock? Just the words themselves are indicative of the level of middlemen who are now stacking a price difference. So if I can get Bitcoin for 25,000, you're going to be paying, you don't realize it, but you're going to be paying closer to 26.5 or 27, and I'm going to be getting a better wholesale rate just because I know how to do what Jarrett's talking about. Go get a wallet, go stack sats, go buy direct. And this is the advantage of having been early. But I am starting to give up that the masses will ever have this advantage.
I think the government is trying to take away that ability and that advantage anyways. I don't think it's just a simple they don't want it. The government is going to make it painstakingly difficult to do
Sure.
it anyways,
Sure.
even if you're one of those that are early in the US at least.
Yeah. I still think we have a responsibility to wave the flag of the revolution, though, because it's the easiest. Go ahead, Jarrett.
Yeah, no, I was gonna say I can't tell how intentional the government is about this. They don't seem like they actually know what they're doing. I mean, we could dive right into Coinbase and the SEC, but it doesn't seem like they actually have like an approach or a vision for what they see for crypto because they just don't understand it.
Yeah.
And so I can't. I agree with what Aussie's saying. The government is making it more difficult, but
Yeah.
I'm trying to dive in and understand: is this fully intentional? Are they fully like, we need to stop people from trading dollars into this new thing because we're worried about the economic viability of the dollar? Or is it, we don't really know what this is and we're just being, fear-based in a new world of tech?
Both. Both.
Right. It can be both, but still, that still doesn't allow me to understand what is their long-term
So-
thing. When I mean long-term, even in 6 months, what do they want from all
So
of this?
there's two things. You've got Congress people and senators who are kind of the second part of the ladder. They're technology like unintelligent, yeah, and they're just fear driven. And then there are either staffers, strategists who are smart and see potential impacts and see potentially. I'm actually afraid to think that there's probably a Bitcoin maxi working at the White House that sees the power of Bitcoin and sees how it could do for people, that he's strategically blocking Bitcoin so that you don't have the revolution that Grant talks about, or the big transformation and the dedollarization.
What do you mean blocking? What do you mean blocking, Aussie?
Inhibiting access, like helping fuel the
To
to
Bitcoin.
Bitcoin and
Influence these decisions. Basically influencing these
they're
decisions.
influencing these decisions to kind of put up these barriers that we're seeing with Binance, with Coinbase, with Choke Point 2.0, all of it.
So what leads you to believe, and why did you single out Bitcoin especially?
Because I think Bitcoin and ETH are probably the two cryptos that probably have the most revolutionary capabilities, and so I think Bitcoin and ETH are, I would say, probably the most legitimate coins in the space, and I think that they're probably the ones that are causing the most stress. Bitcoin, especially because you think they've literally accused Bitcoin of being a national security threat for its use in El Salvador. We've got cryptocurrency fraud being accused of being half the funding for North Korea's missile program. We've got, we got Jason Lowery's, who's works at Space Force, arguing that Bitcoin will be powering like a national security threat. It'll be a national security threat, and it's a national security issue if we don't get into blockchain and Bitcoin mining. And we've got Russia using it for cross-border payments, so to get around the SWIFT banking system.
So the reason why I ask you that is because I do think that right now we're really starting to find the difference between crypto and Bitcoin, and they're not one and the same. None of these SEC notices have anything to do with Bitcoin. No Bitcoin major exchange like Swan, for example, which is sitting there if the US want to come after it, has had any issues. Everything has been more on crypto and not even so much on ETH. We can separate ETH out as you've done. So it seems to me that like this is a crackdown on not Bitcoin, I guess is my point. I think the US is actually fairly open to Bitcoin. We have three current US presidential candidates, and Suarez from Miami is going to throw his hat in. He's also very much into Bitcoin. I actually think Bitcoin is going to be kind of remain unscathed in all this because they also know they can't control it. There's no CEO to send a Wells notice to, right? Like it is a commodity.
So I think that's where you're wrong. And the Wells the notices, yes, they're not listing Bitcoin and they haven't gone after Swan specifically, but what they did is they basically turned off onboarding from most banks. If you look at it, most of the banks that got targeted were all banks that supported crypto. So if you can't access crypto as a whole, you have a much harder time accessing Bitcoin if you're not mining. And I'd love for George Pate to come to say, hey, yeah, but you can mine Bitcoin. You've got them targeting key exchanges. Yes, not Swan, because they don't have an easy way to target Swan right now, but they targeted Coinbase, which is probably the biggest exchange in the US and was the one that most people were comfortable with. So you've got them shutting down the faucet and the onboard with Coinbase. And they are in the language they're using. Outside of Wells notices, it does include Bitcoin. It does include Bitcoin in that language.
I've never seen it.
Wait,
Let's
let's be clear. Does it list Bitcoin or describe something a definition that could apply to Bitcoin?
So there are things that are specifically targeting Bitcoin, aka there's an investigation going on into the national security risks of El Salvador using Bitcoin. That is a specific thing that is going on in Congress. It was an investigation that was launched a couple of months ago. Through Republicans, and I think it had some Democratic support.
So your sentiment is that Bitcoin is targetable, and all of these activities that you're describing point to it's as vulnerable as anything.
It's as vulnerable as anything in terms of the U.S. government doesn't like it. It does. Jarrett was trying to make the argument that the U.S. government is fond of crypto, but no, the U.S. government is not fond of crypto.
I'm trying to make the distinction between crypto and Bitcoin.
Yeah.
I think the U.S. government doesn't like crypto. I think the U.S. government knows that no matter what it thinks about Bitcoin, it can't tell it to go away. It can't control it. It can't, lawyer it up into the stratosphere. That's my point. And I think we're really starting to see that. And since I use Binance US to get all my crypto, that's my on-ramp. Now that I can't put US dollars into that, I'm just only I'm just only buying now Bitcoin on Swan. That's my new play.
Well, I think
because I'm just like, this is the one thing,
I think all Aussie is alluding to is that though the government can't get at it, and I think you're right, the government is realizing it can't get at Bitcoin directly. What I think Aussie is making the case for, and Aussie, I don't know if I agree with it necessarily, but I think that there is an easy case to be made that they're still trying to social engineer dissuading the public from using Bitcoin. But you're right, Jared. I mean, you make at this point, the on-ramps, if you just negate on-ramps, you're now going to be cornered. But I also, what I think Jared is saying is yeah, but like, I'll still always have on-ramps for Bitcoin. It's tough to have an on-ramp for shit Elon Ebu coin. And like, you can't buy that from Swan, but it's going to be a long time coming before they eliminate all the on-ramps. And it's almost like the gate is closing, and the narrowest that the pass gets is on-ramping Bitcoin. Like, you might go like, okay, Elon Inu is getting cut, like Dogecoin's going to get cut in there, and the door is closing, but like, it's going to be well near impossible to shut out Ethereum and Bitcoin on the long haul. In totality in the United States. And I think that, like, Jerry, you asked this question, we ask it often. is the government smart enough to have an end game here? Like, what is it playing at? I am now convinced, whether we have Congress people who are tech savvy or not, and whether or not there's a secret Bitcoin maxi at the White House who thinks they're protecting the revolution by blocking it publicly or whatever you were getting at, Aussie, there, whatever's going on, I don't think anyone is thinking that far ahead except what lines their pockets. I think, what is that law that says the simplest, Occam's razor, the simplest explanation is often the correct one. I think everyone sees opportunism, and by picking a side, anyone who's picking anti-crypto, for some reason, they see that they're able to line their pockets in some way. For those who are pro-crypto in government, and now in we're talking about government, but like BlackRock is a non-government body and it's doing the same. Let's just create ETFs because everyone out there is sheeple, and they're gonna go ahead and buy my ETF share instead of onboarding. And the on-ramps are closing anyway. So let's just come up with an ETF. Let's line everyone's pockets. So I think it's just as simple as greed. So what's the future look like? I think the real takeaway is what you're talking about. Let's continue to stack sats. And for those of us, let's still wave the flag of the revolution and go, hey, boot up a VPN, browse your butt over to gate.io or somewhere, Binance Global, and go buy yourself whatever you want to buy as long as you can buy it, because that's where the power lies if you want to control your destiny. But I think what I'm hearing, I don't think most people want to control. Meaning they don't want to own.
Most
meaning they don't want the responsibility.
Understand what the ability and that control could give them. I think a lot of people are so stuck in just making sure they get by day to day.
Yeah.
That they haven't had, and they likely grew up that way too, is that their parents were just getting by day by day, that they couldn't really dream, and their brain's been narrowed into such a way of thinking that they can't even imagine the abilities and the possibilities for them to go further.
The ability to think complex thoughts. So like you guys have heard me say around real estate, like America is not a cash society, it's a credit society. Our currency is a credit currency, which is why USD seems like it makes sense. Well, I got greenbacks, take my greenbacks. But when I say those are IOUs, the average person, like, that's way too complex. I don't know what you mean about an IOU. I give this greenback to Checkers and I get curly fries. Like, that's what I know. And it's like, so it's a real thing. And you go, well, it's a credit thing, so you're just passing along IOUs to each other. And that's a pretty complex thought. But like what you're talking about is, for me to actually own and control takes a lot of responsibility, it feels like. But I did a tweet, and I'm sure you guys saw it. Tell me if you saw it or not when I said it's easier to get $1 million loan from the SCBA than it is to get a $350,000 mortgage, if there's a deal. And so, well, what's the responsibility? Well, I got a punch list of putting together documents, pro formas, projections. It sounds super complicated. It isn't. It's just annoyingly different from my routine. There's responsibility there. But if I can execute that and they give me $900K or $1 million, and then I'm responsible, I don't even care about the project after that. The money is there. I'm going to be paying people to do this, that, or the other. What I'm paying attention to is what I control. I now control this property, and now I'm making sure that there's a margin in that property, not because I want cash flow, but because when there's equity, there's power, there's influence. For example, you have a property with equity. People don't get this. You have 100,000 equity on a piece of property. I go get a HELOC for 80K. My net asset value now is 180K. Think about that.
Yeah.
The banker sees that I have 180K wealth. Now, you guys and I know that if I spend that HELOC, like let's say I spend 40K of the 80K on the HELOC, I now owe the 40K, so my 80K over here goes down to 40K, but I'm still up 140K. And it's like, where did that money come from?
Equity.
And it came from equity, but said simpler, it came from credit. Said even simpler, it came from the responsibility to read and submit paperwork. It's a bureaucracy. And so I'm trying to play this game as on my crypto self is me trying to escape that game, because crypto is actually the only thing that's real. Because what I just said, think about what I just said.
Jesus Christ.
You know how people look at crypto and they feel like that's not real. That's Shiba Inu. That's Axie Infinity tokens. That's not real, except the fact that it's truly yours is. But here's the thing. In society, we have devalued the real so much that I can go do what I'm talking about with real estate, and that's more real because it's control. But Grant, you are talking some serious shit for 10 a.m. Go get another cup of coffee. That level of complexity, the average person says, please go to the next episode on my Netflix show, because what Grant just said is giving me a hernia.
It's next level. It's a next level of complexity. My 10 a.m. brain is like, I get it. And most of the time, if it wasn't 10 a.m., I would be like fully on it. And I'm like, right now, I'm like, okay, yeah, I agree with you. I understand it, but I cannot counter you or have a discussion about it, because my brain is like, it's fried. It's fried chicken.
Grant, at what level do you sell all your real estate and go all in on crypto? Because you want to do this non-location nation, yet you also want to have like a real estate conglomerate in Southern Florida. And those two things to me seem like strange.
Well, that's funny. So, we talk about like, what is the point to liquidate? Well, so here's an example. I will be a paper millionaire long before I'm a liquid millionaire.
For sure.
And when you look at what it takes to create freedom, whether you're talking cash flow, we've talked a lot about cash flow, and this might as well be Financial Freedom Fridays like we used to do, Jarrett. Yep. Whether you're talking cash flow or whether you're talking net asset value, freedom's defined a lot of ways. For me to cash out of anything, real estate or anything, and it wouldn't be about going all in on crypto. If I were to cash out, I would not necessarily go all in on crypto, because when you cash out, you're in a pickle. Where do I cash back in? If I cash out, I've taken all of my, to borrow an agriculture phrase, I've taken all my seed corn. And my seed corn is the corn you set aside to plant next year's harvest. Yeah. So when you cash out, you've taken all of your seed corn, and if you start eating it, you're eating the seeds for next year's harvest. And so you have to have a plan on where to go next. And crypto currently is not the best play, because it's a double-edged sword. Crypto is amazing because, like I said moments ago, it's the only real thing, and you fully control it, which means it's limited to your limits. What I mean by that is, if in the example of the equity of my real estate, in this one example, 100K real estate brings out an $80,000 HELOC. I've just increased my power, aka my control, by 80% by filing paperwork. Meaning my ability to do shit in the world, to buy more curly fries, to buy another pair of shoes, has gone up by 80% by filing paperwork. I can't do that with crypto, and that's a feature, not a bug, unless you're trying to build wealth. And we used to, right up until like when degen season's in full swing, I might be able to like pull some arbitrage and do this or that, or we're hoping for Bitcoin growth, but I still don't control it. And the fact that how do I just increase my control by 80%, my net asset value? Well, the fulcrum and lever is this society that we bitch about all the time. It has the mechanisms for it, and crypto doesn't. So my answer to you is, that's my context. The content of my answer to you is, when the paper bureaucratic wealth I have so exceeds, it probably needs to exceed by close to 100x of the cash I want. So if I want $1 million cash, liquid, so to speak, if I were to bail out of that system, the fiat system, and bail into the only real system right now that exists, and I'm excluding gold because gold is synthetic for the most part. Like, I'm not walking around with gold. So for all intents and purposes, pragmatically, it's also synthetic. Crypto is the only real thing. If I wanted $1 million in crypto, I would probably need about 100x. And I'm not exaggerating. I'd probably need about 100 million in paper wealth. Because if everything starts to liquidate, as you start selling off and paying in between people and paying all this stuff, and then you're sitting on that capital. Now I'm exaggerating a bit. I probably could get away with 50 mil for me to officially pull what you're saying and say, F you to the full fiat system. I'm investing into crypto, and then I'm just like figuring it out.
Well, you could
It needs
So it's
to be
going to take you.
you could cash flow $3,000 a month on ETH close to current prices with 350k. If you want to have double the cash flow, so to have essentially money to reinvest, or if prices go down, you're talking 750,000, maybe a little bit less because ETH has fallen in the last since I last ran those numbers. So
sure.
you could very
Everyone says that.
you could very easily add $1 million.
You could very easily
Add $1 million.
Show me.
At $750,000. If I had $750,000, I would be doing that right now. I would be if I had that wealth number.
So Grant, you want to have 50 million in paper wealth before you would feel comfortable selling all your real estate. Let's say 50 million in real estate wealth before you would sell it all to put it all into crypto.
Yes, in that context, let's be very clear. I'm taking you up on the parameters you're giving me. Based on the parameters you're giving me, yes.
What were the parameters that I gave you?
Selling all of your real estate to then put it into crypto.
Okay.
Yes. What if you ask me a different question? Grant, what would it take you to liquidate your real estate and then operate as financially free, whether it's crypto or elsewhere? Oh, much less. 5 to 10 mil.
So you won't put it into crypto until you had 50 mil paper because you believe in crypto less.
No.
You did.
No. See, this is the thing about money. It's paradigms. Like what Aussie was saying, if I had 750,000, for me to have 50 to 100 mil, I don't think I have that in cash. I might not even have that in equity. And so I'm not sitting on, when you're talking about 10 to 50 mil, you're not saying that you even have 500K in the bank, Aussie. You couldn't go buy what you're saying because it's paper money. It's all make-believe. And so you have to be careful about how you're selling it. For me to go all in on crypto, I'm assuming, do I believe in crypto less? Not in crypto itself, because I have asserted, and I do believe, it's more real. But more real in terms of security, given the realities of the globe. For it to be more real, it's less valuable. For it to be more real, not because in principle we can all agree if I put a bar of gold in your hand, that's more valuable. But in our society, what do you do with it? You're not going to carry it around in your purse. You're not going to shave it off. Society, for better and for worse, and I mean for worse, has been engineered that the realer it is, the less it has currency value, the less purchasing power you have in the United States. When we talk about the future of Bitcoin, I'm not a maxi. I'm not a Bitcoin maxi. I'm a crypto maxi. I think it'll be good over the long haul. But can I go buy curly fries? So when we talk about liquidating everything and putting it into crypto, I guess to answer your question, because you believe in crypto less? No, because I believe it's the realest thing out there. I look at the reality of the buyable market and realize the market don't give a shit about that. That could be puka shells. So I need to have a whole entire financial construct that would free me up in a way that I could dabble. I would never go all in on crypto. That's why you've given me this farcical number of like, well, it's got to be 50 to 100 mil. Because after I liquidate it all off, I want net cash to me in the bank 1 to 5 mil because I could like minimize my life for an indefinite period on that money, and then dabble with Ethereum nodes and dabble with stacking sats so that I hope I hit the halvings and it grows. But then what? Then I got to cash back into the market somewhere because I believe I believe the market and the government And the capitalist environment will continue to create obstructions like we're just talking about off-ramps and on-ramps. I believe they're going to continue to make that
Just move to
difficult.
Bitcoin Lake and Bitcoin Beach.
For now,
Like,
maybe. Does it have everything you want? Maybe.
hey, you love surfing.
Maybe.
You
Yeah,
could go
I mean,
surfing. You could get.
I could go. I could surf all day.
You could go surfing all day. You can have your bonfires on the beach. You
Yeah.
could buy food and whatever you want with Bitcoin. So I've
Yeah.
solved your problem right there.
Yeah.
You just have to move to El Salvador.
But I don't want to retire, and that's the other thing, Jarrett, too. And I think this is why I love money. It flushes out core values. I don't want to check out. I'm not interested. I do want to do Bitcoin Lake for a hot minute. But when that's all said and done, I'm not in this for the money. I'm in this to cut a dent in the world. And if I liquidate it all into crypto, not because I don't believe Bitcoin's not going to go to 100 or a million each, I don't believe it's going to do it in the time frame I need to make the impact I need and the liquidity I need it to. It's a tool. Go ahead, please.
Yeah, no, I understand. I guess I just, I think that you're going to hit a point in the next 3 to 5 years where you're going to be like, shit, Grant, what am I doing here? Because I truly believe diversification holds bags down.
Diversification.
This is like,
what's the definition of diversification?
just buying into like 17 different sectors. You got to choose like 1 or 2 horses and really go on them.
I agree.
And if those hit, those hit. If they don't, they don't. And it goes back to the responsibility and reward you were talking about.
Yeah.
You want a lot of responsibility, go in all on Bitcoin. If it doesn't fucking hit, let's see what happens. It's not going to be good.
Yeah.
But if it does, the reward may be exponential. And I guess I was listening to, when Jeff Bezos came out in 2008 and he was like, I know you guys all want dividends because that's what you all breathe off of. That's what you live off of. He's like, F that, we're doing growth. If you don't like it, buy another stock. And that's how I feel about crypto. You kind of got to be like going in on Amazon in 2008, seeing the vision, understanding where the world is, where it's going to move, skating to where the puck is going to be, not where it is. And
I think it's real estate. So I agree with you. Like, people look at me and they think I'm diversified, and I do not think I'm diverse. By my definition, I'm not diversified. I have real estate, and then I have my screw around bags. And my screw around bags include a retirement account, and I do dabble. Those are diversified, but they might have done 11% over the last 10 or 11 years. It's not great. It lives by what you're saying, but that's its own thing. And then there's crypto, and I have gotten some pops with crypto. And within crypto, I'm narrowing my scope. But I hear what you're saying. And the Amazon is not the rule. It's the exception that proves the rule. We talk about a lot of these anecdotes, and I do look at them for inspiration, and I do look at them for tactics, but I look at them for tactics in the hope that I create a unicorn breakaway, but I know the probabilities are against me. I know the probabilities of going all in on one thing are against me. And I'm not widely diversified. I'm more diversified than you are as a maxi for sure. But I know for a fact there is no unpredictability in real estate, and it's as leveraged as I want it to be by choice.
I think I would agree with you on the leverage part,
Yeah.
because that's basically what you were getting to with the fakeness. I mean, how do we create 80 out of 100? Well, you fucking print it. It's fiat. It doesn't actually exist. If I said, hey, Grant, do you want to buy this token? You can get 100 of them for $100, and then you get 80 of them if you just fill out paperwork. You'd be like, oh, that sounds like a Ponzi scheme, right? Because I just described a Ponzi scheme.
Yeah, literally.
So I agree on the leverage part. I don't agree on the security part. I really don't. Or on the what was the other part you said? I wanted to use the right
Predictability.
word. The predictability. I do not agree on the predictability part.
Really?
I think
Relative to
No.
what we're seeing in every other sector, including crypto.
I think crypto. The
And Jared
cycle.
specifies Bitcoin's different than crypto.
Well, Bitcoin.
Yeah,
Bitcoin,
and
the
I'm not
cycle. You follow the cycle, and you can. It's been pretty predictable up until this point.
Yeah, predictability. I agree with Aussie. I mean, it's a literal math equation. It's cutting in half every like 3.5, 4 years. I guess my point is I don't think real estate's predictable at all anymore. You have real estate in Miami going up through the roof, and yet there's like the sea level is like going to consume that thing in, I don't know, in our lifetime. I think that real estate is something that we're using an old game to build wealth in a new world, and real estate's analog and crypto is digital. And I just think that long term, even in the United States, between eminent domain, between climate crisis, between political shifts and where people are going to want to live and where it's going to be actually okay to live, I think real estate's going to take a freaking hammering over the next 10 to 20
Well, that
years.
and what we're seeing, at least we're seeing it in Canada a lot recently. A lot of the shifts, especially around inflation and tenant protection, and or tenants literally just they stop paying rent and but refuse to move out because, and it's happening more and more in people that might even have decent jobs, just because rent prices are jumping up so much that they're not. It doesn't matter if they're like they're willing to wait out 6 months or a year.
Which is a double-edged sword, right? Because that's could be the exception that proves the rule that, well, rent prices are going up, as you just said, Aussie. And if Grant's a landlord, he's like, duh, that's why I hold real estate, because it outpaces inflation.
But then you get the you potentially have a tenant who won't move out for 6 months or a year or more because
yeah, but even then, he still owns the underlying asset. Maybe he has to come out of pocket, but he still owns and controls. I guess I'm just saying, I think real estate is something that's going to get hammered over the next 10 to 20 years. It's going to start with commercial real estate over the next 24 months. And I just think it's really going to hurt people. And I think people are putting too much money into real estate, and they don't understand the third party and counterparty risk that exists when compared to something else. Like you're saying, Grant, like you could walk around with $6 million of ETH in your pocket. No one even needs to know. No one can touch it. No, like there's so many less problems that can happen. And I just think the climate crisis is something that we're all way underestimating how it's going to affect real estate and people's proclivity about real estate. People are going to be like, oh, I don't want to get in a 30-year thing. I don't even want to do this, but maybe we are going towards a renter's nation, what I'm saying. And Grant just wants to, have as many houses on the monopoly board. But even then, I just think those gains, even if you gain 100, say you gain 30 to 40% annually on your real estate, crypto's still going to outdo that over the next 20 years on the long term.
There's no math. Like the Bitcoin halving doesn't prove demand. And the thing about real estate is you can predict both demand and supply tightly, including climate. Like, I don't know who you guys talk to about real estate, but everyone I talk to about real estate is factoring in migrations and changes with climate. And everyone I talk to about real estate, it's hey man, this market's shifting to this market, and that's just the way it goes. When it comes to like Bitcoin, I of course we can calculate supply, but I can't predict what's going to happen in the next crypto war. Russia's using it for cross-border. Finally, the government gets a massively conservative president, which looks like we're going to happen next time. And they go to become a war hawk. Like these are so unpredictable, but supply and demand of where to live is, to me, completely predictable. And and the other thing is, it's not just about 50% growth. Remember, it's paperwork where I can get 80% growth of what really matters.
Oh, I know.
Control.
I know.
And
that's why I'm not going to argue the leverage part.
yeah,
I know you can take one apple and turn it into 15 apples.
yeah,
I'm talking about the predictability, and I just think that
wild. We should all do a poll. I would like all three of us for our different audiences, like on Twitter or LinkedIn or something, just to see what the public thinks. Because I would be curious. Because to me, the shock on my face is like when it like if I were to say pick an industry's predictability in any category, and nearly to a person, I would have assumed everyone would say real estate. It's the most predictable there is, including crypto.
Grant, I still think that real estate is more predictable than Bitcoin.
Okay.
But I think we're using historical figures to come to these conclusions, and we haven't had the climate crisis the way it's going to be over the next 10 to 15 to 20 years. Therefore, it throws off all of our historical data we're using to create our current day predictability. That's my point.
Okay, that's an interesting nuance. No one I know goes like that. No one I know in real estate.
I really think that's a really fair point, especially when we start thinking about the economy. Like we pair the economy and the climate crisis, and you're talking really, really serious ramifications towards growth in the overall economy, housing, and predictability of housing and the economy is going to go like that standard 8 to 10%, 8 to 12% that you might get from the S&P 500 or anything else. I don't think that those days are guaranteed anymore. I really don't.
I don't know anyone who
Exactly.
takes so like if you're talking about past performance, literally your argument for the predictability of Bitcoin is past performance. And a lot of people do that. But Bitcoin's so new, we say that its past performance has been mathematically predictable, but there's no history. Everyone I know in real estate might look at old trends, but they know when that stops, and then they factor in future factors like climate change, like moving markets. So, I mean, every real estate person I respect does not go like, well, this happened in 2001. It's going to do that again. Like, no one does that. Like, not any serious real estate person I know. They say this happened in 2001, and this is how today is different. And so when I think of predictability, I think of people who are staying nimble-minded, addressing what's going on today, and realistically, climate crisis happens. Like I'm in Polk County, which is in the center of the sandbar of Florida, right? And we look and go, okay, everyone's going to migrate in from the coast over the next 50 years. So let's start stacking property center state and up the ridge line up into Appalachia. Why? Because all of these things are going to become floodplains. And it's like, yeah, keep stacking. And so what's the demand going to be on a piece of property or a multifamily in the middle of the state when you've got families in droves moving in? And it's like, okay, and so how do you create the conversations around affordable housing right now too? And so for me, I think it's just it's so predictable. Like
I don't think it is.
So I'm gonna go with the wildfires that we're having in Canada right now.
Yes.
So
Okay.
the wildfires in Canada have not been where they're happening has not been predictable. They're affecting communities at random and all over the place.
So fun fact, how has that been predicted with real estate? It's already been predicted. What you're saying is completely predictable.
No, this is what I'm saying is wildfire. What if an area that never has had wildfire before gets wildfired? No one wants to move back there because they've decided you might get insurance. You might get insurance to get the value of the home back.
And your earnings, yes. Keep going.
And your earnings for whatever, 6 months. But you don't. But at that point, that property potentially becomes valueless because no one wants to be there because maybe it's been hit by wildfires for the last 5 years. Or
you just made my point. Go ahead, Jared.
Yeah, I think I couldn't agree more with Aussie. I mean, I have been looking at land up in Vermont for a long time, and my father was just in Vermont visiting my sister who lives like an hour from the Canadian border, and for like 3 or 4 days, they like couldn't breathe, literally because of wildfires
for a while.
And so that's not something I ever took into account when I'm thinking about that land up there. And my point is, I feel like you're like, oh yeah, and then we'll buy land and then we'll buy houses inland and up. And it's like, no, I don't think you're taking into account like the political policies that are going to occur. They're going to force people to leave Florida. And it's not about, for me, this is climate change. It's not about where the water hits. It's where the ripple effect of that water gets to. Even in my town in Massachusetts, when the $1 million homes get wiped off the front of the beach, it will affect homes that are 2 miles inward, 1 mile inward, the property values. People are like, well, we used to live here because there was a nice coastline and there was a nice beach and there was this and that. Oh, and now that's not even there anymore, And I just think that like 50 years or whatever timeline you want to give yourself, I don't think we can take it into account because we can't really predict two things. Well, we can. We can try to predict what we think humans are going to do, but we've never really had this before in human history, what we're about to run into. And also like nature, right? Like there could be a hurricane that just comes right up through the center of Florida and devastates everything. And people are like, wow, that was horrible. I lost somebody. I'm out. you know?
But both of you are
I
literally talking about what's categorized as acts of God, and we could just as easily be talking about crypto.
I think acts of God.
And
You call
in
them acts of God, but I don't think they'll be acts of God anymore. With
yeah,
climate
and
change, they're not going to be acts of God anymore.
well, whatever you want to call them, but you're missing the point. You literally could be making the same ad infinitum hypotheses of like what could go wrong with a thing.
but but yes, okay, this is great. What can go wrong with crypto probably has nothing to do with nature. The things that go wrong in crypto have everything to do with humanity and people being greedy as of now. All the things that have gone wrong in crypto literally have to do with humans. Climate change is not that. Climate, like, we impacted climate change, but I'm saying like what nature wants to do, we have no control over. And that's the thing that I think that when I think about real estate long term, I just feel like is just such a wild card, you know?
That is too funny. Like I see
I mean, seriously, think about all the bad things that have happened in crypto. FTX, that was Sam and his little poly group. They
sure
were screwing around. It has nothing to do with the underlying tech. We know it has nothing to do with the underlying tech. The Do Kwon thing, that was him being, an idiot, whatever. That had nothing to do with the underlying tech, right? Uh, Even like the Silk Road, I think that was like a cool thing that guy did. I'm blanking on his name. I know he's still in jail forever. But that was still like human greed. And you were talking
something
about this at the beginning of the
something.com,
show. Well, it
met.com.
was silkroad.com, but I'm trying to think of the guy's name who got behind.
Yeah.
But my point is like, I hear what you're saying. We can think about the demand and like what people want housing, and then we can think about the supply, how many houses are there, and I can look and create predictability. I'm saying nature comes along and changes that. And exactly to Austin's point, like, oh, we didn't even know this was a fire. We weren't even worried about these forests becoming a forest fire zone, and now here we are, and this is our new reality. I mean, ask people from Paradise, California. They never thought that their whole entire town would get burnt to a crisp. And I just think because of that, because we're not sure where like land is going to change, housing is built on top of land. And yes, you're right. If it burnt down, you would get 6 months earnings and you would get your money back. But then after that, you wouldn't get what you really are in real estate for, which is the cash flow to help you create a lifestyle you want. Because then that value, no one's going to move in there because there's no local store, because there's no post office, because there's no roads, because there's no sanitation, because there's no water. And I just think that these are all things that are counterparty risk. And with climate crisis on top, that's where I think like after 10 years from now, I don't know. I think holding 10 years from now, not now. I do personally think that 10 years from now, we'll call it 2033, holding a real estate portfolio, I think is going to be less sought after than having just a big crypto bag.
I don't know. Like the proof will be in the pudding because, like, for example, you're talking about nature, and it's like the number one complaint against Bitcoin is the proof of work and energy consumption. We're solving for that. Technology can get more efficient. We've got, sharding with Ethereum and the Lightning Network with Bitcoin, and so like we're troubleshooting that. But I do agree that greed is the dominant, and I don't mean greed from a bad perspective. Economics is greed. We have to pay attention to that motivational force, and it's the biggest one there. But the thing about greed is it itself is unpredictable, and that could do a lot of things. I do believe climate change will affect real estate, but what I'm saying is climate will affect real estate in a predictable way. Governance, greed, pocket lining, climate change as it impacts if we're going to be allowed to mine Bitcoin or crypto because of climate impacts. I think that all of these arguments could just as easily be made against crypto. It does have very good features that I love. It does have a future that I love. I just don't think it's more predictable because just in Aussie's example, because of the underlying architectures of things like insurances, of consumer protections for landlords, all of the mechanisms that already exist, should something go wrong, is us guaranteeing a better future than with a bunch of things that, yes, mathematically, yes, the adoption, yes, if more countries adopt Bitcoin, it does stand this potential. And I have no doubt that it will have a value that's super high. But if we're just talking about predictability, I have yet, not just here, but like anywhere I've read, have I heard an argument that I'm like, that applies to crypto too. Like that doubtful hypothetical applies to crypto as well. So I just don't see the
No,
predictability.
so yeah, to like say, well, they could ban Bitcoin mining. That's once again, that's humans making that decision,
Yes.
saying this is bad for whatever reason. Humans are going to do that. I'm saying nature is a different element you have to add into your calculus that is outside of humans at this point.
And it's outside
And
of our control. Like there's not a human that'll decide, hey, a hurricane's
I
gonna
agree.
hit.
It's just not predictable.
And like you could influence politics to get them to maybe influence a better outcome for Bitcoin. My point is this: I predict that things will fail. That's the number one assumption of an entrepreneur and an investor. This will fail. So what are my protections? And when we look at protections so when we're talking about predictability, we're talking about the protections in the case of failure. And in the case of failure with crypto, there is very little protections. And in the case of failure of real estate, there's a vast amount of protections. And so that's what I mean by predictability. Go ahead.
There are a vast amount of protections as the world is today. When we have 6 Katrinas every single year around the United States, guess what? FEMA's not going to work. Guess what? You're not going to get insured for your house. There will be a point in 20 or 30 years, if not sooner, there will be an event and homeowners are not going to be made whole.
You look at Katrina and New Orleans. Like most New Orleans is still not rebuilt after Katrina. Most people that were there, most of those homes are gone, disappeared.
And you're talking about the hypothetical worst case scenarios. You're right. When the Katrinas of crypto hit, no one will be made whole. As we've
and that's happened, but that's
happened.
But that's part and parcel of the game of crypto.
Same.
If it comes along and it takes you out, it goes back to responsibility reward where we started this whole conversation.
Yeah.
I feel more confident in Bitcoin than I do over the long period of time of the government coming and saying, you know, your house got wiped away. Let me help you fix that. Even though it's been in a flood zone for the last 15 years and the climate crisis exists and the temperature has been heating up, you know?
Yeah, that's interesting.
And to solve all of those problems, right now the US government's spending $100 billion plus annually to solve climate crisis. Guess where that money comes from? We're probably printing it.
Oh, yeah.
So as the climate crisis increases, so is fiat going to have to increase.
Yeah.
And guess where a lot of that money is also going to trickle into as people lose their homes and they look for a better option? Bitcoin. I just think that there are things right now that we possibly can't understand because we've never been to. And I do agree with you. Like the US could ban mining, this, that, and the other. But like, I don't know. I just think in our predictability models, I'll give it to you 100% daily that real estate right now is more predictable than Bitcoin. But I also want to say that Bitcoin has been around for 14 years, which is probably more like 35 years if it were a stock because it is 24/7, 365. Not just in crypto years, but because it literally exists day and night, not like the stock market, which up until Fed now, which launches soon. So it's really more like a 30 to 35-year-old thing. And we have so much data and it's so transparent. So I do think the predictability is actually becoming stronger. And if I had another maxi on here, they'd probably try to make that a stronger argument.
I support it. I'm not a full Bitcoin maxi, but I support the argument. I do think we're already way over our time though.
We're way over.
So let's make some shout outs and let's wrap it up.
Who's going to start? I haven't even been thinking about my shout outs.
I'll give a shout out. Shout out to you guys for doing the last 2 shows. One I was traveling for, and on Tuesday I was just did not want to be on camera. I still felt really crappy. I've got this like smoker's cough. I just thank you guys for keeping the show going. So yeah.
Shout out to you guys for entertaining this dialogue as long as we have, because I am digging and natively curious for an argument that is beyond the normal arguments, and we still haven't hit on it for me, but we persist in it, which I'm happy for. In fact, if you go back to me and Jared's earliest conversation, it was what will hit $1 million first, or what would
no. It was what? How would we each invest 100,000 today if we had to?
Today, if we had to. You know what? We should go back to that date and drop money in both hype and paper trade it back to today. We should go do that.
Okay.
We'll go do that and just see where we would stand. And then so that was my first shout out. My second shout out is the industrial real estate complex for giving me every mechanism from the borrowing to the lending to the consumer protections to the landlord protections. The industrial real estate complex for the amount of security it gives me versus y'all. That's my shout.
Shout out. You know what? I'm gonna shout out Jason Lowery and the National Software, because I think that is an incredible piece of literature. And shout out to all the climate scientists out there trying to give us some of the predictability that around climate that we're hoping to get. So shout out to all of my fellow and my friends who are all working in and around climate change. So
yeah, man, that's too funny. Well, everyone, thank you so much. Catch us next Tuesday, 3:30 p.m. Eastern Standard Time at notcryptobros.xyz, YouTube, Facebook, LinkedIn. Find us in all those places.